What up, guys? So we're gonna do our pre-London checklist here using our gold, GU, and EU charts. We're just gonna do step 1 to step 10. Doing a quick video, getting ready for London session. You can see that is 11 p.m. and London is still about 4 hours away, 5 hours away. So we're just gonna get ready for the market, make sure it's worth us staying up for the night, or if we don't have any issues of a potential trade running into any of our targets. So starting with gold here, we're going to start looking straight at the 4-hour chart, and we're going to mark our external highs and our external lows. As you can see, price is bearish because we have bearish momentum, and then we have our inducement with our BOS, right? Another inducement with another BOS with another inducement, another BOS, and you get the picture, right? We are currently bearish in the market. So we'll get rid of that. We don't need of all that mess on the charts. It's just going to confuse us. We're only going to mark out certain targets. We're going to mark out our 4-hour externals. Then we're going to jump down to our we're going to stand at 4 hour and find our internals and mark our decisional and extreme zones. And then we're going to jump down to our 1 hour to kind of confirm direction on the 1 hour on the lower section of the trade. And then we're going to jump all the way down to our 15 and then our 1 minute. So next step here, we know that we have an internal structure high here. Let me grab this. We have our internal high right there and our internal low. All right, we're going to mark out our 2 targets. We have our decisional zone with imbalance. Remember, this is all imbalance down here, but we're going to mark it probably about here. We're going to mark this as a decisional supply zone because supply, why? Because supply means heading to the downside. All right. So next step, we mark out our weak zone or our next potential target, which could be at our internal high. Why is this a weak zone? Or not supply, my bad. That's going to be a weak zone like that. Because our internal high does not mean there's a supply there or an extreme or anything. It's at a structural high where if it does happen to pull up into that zone, there's a good chance it's just going to come right back down, or there's a good chance it doesn't even matter and it's going to push all the way to our extreme supply. So we're not going to mark our bottom zone because we don't know when that's actually going to stop. We could look left on the lower time frames once we get closer into this part of the trade on the lower time frames. We can look left and see if we can find a lower low target to see if we can get a sweep on a sell off of this decisional supply. All right, I'm going to take out my retainer. Now we're going to jump down to our 1 hour just to confirm direction, find if we have any other structure in there that we need to mark out or just be aware of. So we're jumping down to our 1 hour time frame here. You can see if you wanted to, you could take your supply zone and just bring it, squeeze it up a little bit, clean it up in there. Once again, we're going to take this, we're going to squeeze it up. We're going to keep it to that candle there, knowing that there is imbalance in our supply, but we just took the supply zone and stretched it over imbalance. So now we know that there is imbalance in there. Okay. Same thing with your extremes. You can keep them how they are or stretch them in a little bit. Clean up the charts. You don't need to mark. If you want, you can get rid of your internal highs. And the way I do that is I grab a little pen here and I mark it with internal price action. So then I know that those are my internal highs. See, I just have the internal highs and internal lows, and I have that marked. Just go down there. If you want, you could even mark this internal structure here as well, knowing that there is going to be a chance of a target in here as well. But this is all mitigated here. So that being said, this is the only structure that's not mitigated. And what do you mean by mitigated? Well, you can see price took the sell, consolidated, and sold again. And then what did it do? It consolidated back up to the head and shoulders pattern here, right? And then sold off. So what can we predict that might happen again? Well, we can see the consolidation to the upside, right? Where it retest, and ultimately we want to see it retest at this zone here, which we will narrow down when we go down to the 15-minute. We'll redo our structure and narrow that down to the downside, right? So we want to see where we can get this like smaller extreme to then push it to the downside. All right, I'm actually gonna mark it. We don't need to mark that. Now we're jumping down to our 15-minute time frame, and we're zooming in into basically we can see this here, this here. We're having the pullback. The only difference about this one and this one is this one's a straight dump, and this one has an internal structure piece on it. As you can see, here is our high. We're gonna mark it with our extra bullish. It's gonna be bearish, and this is our bearish bottom. So now we're marking these. And once again, these are internals here on the 15-minute. We have our external high, external low, our weak zone on the 4-hour, and our extreme zone on the 4-hour below our external high, right? We have our external low here. Now everything is marked in the current price all the way up to here. This high, this low, this high, this low, this high, this low, this high, this low. Okay, everything is marked. We don't have a bunch of drawing on the screen, and it's pretty. The layout is pretty. It looks good, very understandable. Okay, at this point, we are taking our 15-minute external high and external low and marking out our extreme zones. So with that being said, let me zoom in here just a little bit more. As you can see, I am marking out this whole candlestick here as my extreme on the 15-minute extreme supply. Like that. That whole candlestick. Boom, like that. And then our decisional. Once again, this is our decisional supply. And this is our weak zone that has no zone. There's nothing here. See how it's all been mitigated? So we have all this imbalance. We have all this imbalance here, which is not, doesn't lay pretty, but there's imbalance here. We have a retested supply of a zone here. So ultimately, this zone was this big until this candlestick came all the way up here and retested it and sent us down, right? So that's why this decisional is the size that it is. It is a decisional zone. It's actually not a decisional. It's going to be a SMT like this because we don't know if price is going to keep continuation to the upside, right? Like this, and then have the rejection, like this green, or if it's going to come up here, have an inducement, come up here once again, have the retest, come back, retest the BOS, and then head to the downside. We don't know yet. So there's still two opportunities in this that price could continue up to the extreme or it can continue downside. So we're not aware of what's going on yet. We want to mark it as the decisional, but it could be an SMT on the lower time frames. So we'll find out. So you can either mark it with the question mark or your decisional supply. So decisional meaning you haven't decided yet what is going to happen here, or nothing has played out yet. Going down to our 1 minute, we do the same thing, except now we're looking for an entry signal, which, as you guys know, is our 2-leg check with the BOS retest on an inducement in the correct direction. So we're chasing liquidity. We have all our zones marked up. So again, go back to the 15-minute, and we know that there's structure here, structure here. So we look on the 1 minute. Can these get caught as areas or supply zones or demand zones? Yes, there's a bunch of traffic right here where price has bounced around and then broke through it and then came back to retest this to then push again. So that means we know that this is a strong zone as a take profit area, right? You know that this is going to be a demand zone or it's going to be resistance, right? We know that this is going to be some resistance. At these points, you don't need to mark every single one, just closest ones to the entry signal across when you get into the trade. So obviously you want to see this get filled and mitigated. You have all this liquidity down in here on the 1 minute. If you run a string up this, you can see that there's liquidity there. And then Looks like there might be some liquidity here. So we already know that there is liquidity in this market, and that there's a good chance that the trend line liquidity will get swept. So we're not going to mark out extreme targets, but we're just going to mark out basically the next target that we can see. It's going to take a little bit, so I think this is going to get mitigated. And once this is broken, it's going to be pretty clear as day that it's going to head to the downside. And then you also have your opportunity to find your highs on this structure up here. Okay, what zone? What could be a good target? Okay, we know this is here. And we know this is here, right? So I'm going to stretch this out. There's a chance that price does push up into this zone again here on the 1 minute. So this would be our extreme supply. And then this would be a smart money trap or a question mark, because we want to see clear direction off of this zone, knowing that our extreme is right there, right? Price has already rejected it not once, not twice, but 3 times, and has had the bearish inducement. BOS here. Let's see, did this have a BOS? Okay, we can count. That had an inducement there. And this had an inducement here. Yeah, we're not going to count that. But as you can see here, this has induced this, created the BOS, and now we have downward pressure. Yes, this kind of did give us a bullish push, but I still believe we are still bearish on this overall. Going back to the 15-minute, we can double check. Are we bearish? And you tell we are still bearish because we are in our internal high and internal low. Price has not pushed above it. 15 minutes is still bearish. Higher high, higher low. Price is now pulled back up to then retest this little neckline area here. I still think that we could potentially see the pullback here on the 15-minute into the extreme. Like that's still a huge potential, as that is a line there. So I'm actually going to mark this. The bottom there, that could be a nice target. Looking left, there is a little bit of structure in there too. So we could see this continue up to the front and create more liquidity and grab liquidity out of this demand zone on the extreme supply there. This could be a good trade for London tonight. So we're just watching and paying attention. All right, now we're looking at GU, kind of the same thing. We're going to overlook it quick just to make sure we should even keep attention to this trade. You see, we do have lower time frame targets. This extreme is obviously blowing through, so we don't need that anymore. Let's start all over again here. Positional demand got taken out. Old markings. All right. So one big thing that I will say is you should be always cleaning your charts no matter what. Like, you don't want a bunch of stuff on your charts at all times. Otherwise it just gets cluttered and messy, and it's confusing if you want to know the truth. Ultimately, I try to keep my charts as clean as possible. So for right now, like, I don't normally leave this, and I sometimes don't even use my balls here just because I'm so used to just kind of remembering and seeing it at all times, you know. So on the 4 hour, here's our external high and external low right there. So I'm pulling it out now mainly for you guys so you can see kind of what I'm doing. External low like that. All right. So as you know, here at this point, we would take our blue dots and mark our internal prices here like so, and then go down to our 1 minute. And this is, well, we can draw these two if you want. Positional supply. I'm also going to mark this as a decisional, I think. No, I would say this would be a weak zone, but I think it's another target. And I like it as a target. So I'm going to do a decisional supply there as well. And big candle came back and kind of ruined it. So this will be an extreme supply since this is our external high. Yeah. All right, going down to our 1 hour here, we're gonna redefine things, make it a little pretty like this. So we have it redefined. So now looking at our 1 hour, you can see that this doesn't actually look as pretty as I thought it did on the higher time frame. So it's actually not very nice. So we're not going to target that. We're actually going to put it up here as a weak zone here. So now we know where the weak zone is on the chart. Unless it could be here because there's a balance there. Got that found out. Now we know our internals here. Let's go to the 15-minute. Now we have our targets marked out. Now we know our internal high and our internal low. Now we know where the targets are, right? These are take profit points. Does that make sense? These are your take profit points. So if you get a nice trade off the decisional, once it's, tuned in to a certain point, you find your 1 to 3, right? Obviously, your stop loss is going to be a little bit tighter. You find your 1 to 3, and then you hold to your external lows. See? Pretty simple, very easy, right? So this is our extreme supply on the 15-minute. If we zoom in here, find out exactly what we're seeing. Okay, zoomed in. We find our supply zone mitigated. So we're actually just gonna do this here as our extreme supply. We have our internal structure, right? Internal structure like this. And can you notice what we're doing step by step? Same thing over and over and over again, except the only difference is you're starting from the 4 hour and you're building the map. You're starting from the higher time frames. You're starting from like the easiest level and leveling up to level 10. Like level 1 is the 4 hour. Level 2 is you know, the 1 hour and so on. And we're just taking it and shrinking it down into making it smaller and smaller and smaller now. And then when you zoom out, you're like, okay, price is at this, it broke through. Okay, now I know I'm bullish on the 1 hour. Price broke. If price just flies up through here and breaks through, now you know your 1 hour is bullish, right? And now you can predict that price is going to come up to these zones in here. You rechart your external high and your external low on the next zone, right? You rechart it. So you do your extreme, you do your supply, you do whatever. Once price breaks through this, you're just making it easier. You're cutting out this distractions right away in the beginning of the week. You know your targets. You know what it's going to target. And then it does this, and then it pushes, right? But now you know you should not take a sell off this zone, right? This is the 4 hour. If price is all the way up in this weak zone, you already know in your head, okay, I shouldn't be waiting to sell at this zone because the extreme supply is just above. And you know that this is a big old magnet right here, right? There's a big old magnet. I wish I could put an emoji up here with a magnet. What does this do? Strong magnet. I don't get it. I don't get it. But okay, so this is a big magnet. So this weak zone is telling you how don't take this trade, don't take this trade, don't take this trade. This extreme is right above you. There's a magnet right there pulling price up to the extreme. And that's where we wait. We want to see this absolute bottom zone get taken out. What we want to see would be the coolest thing ever, right? The big trades is when you get in down here with a stop loss like that, and then you hold it to the extreme and make a new high. Those are the trades that you're working for. You're just starting at the smallest level. We know that we're bearish. We're waiting for the entry to go to the upside, right? That's why going to break even, and leaving runners is very, very important because you get your 1 to 3, right? You take your profit at half profit at 1 to 3, your partials, right there, right below your decisional zone, right below where it could potentially come back down, right? And let your partials run. And if your partials just keep running and break this decisional zone, you're just keeping your break even, and then you're going to move your, once it's a price is above the decisional, you move your stop loss to your internal low area, and then price keeps pushing. Once it breaks the internal high, you bring your stop loss all the way up to the decisional supply. You get the point? It's just letting it ride, letting your partials ride until it comes back and takes you out. That's how you get these big plays like that. Just keep zooming in, go slow, find what's going on in the market, right? So now go back to the charts here. We know that this is a potential hotspot. We know that this could be our decisional supply. Price could come up here and reject it, but we have to go down to our 1 minute to redefine that. And we know that there is no weak zone in here. We know this is all just filled with liquidity. We know there's tons of imbalance in there. So now we go down to our 1 minute. Once again, we working at current price. We're zooming in. This was the 15-minute zone, right? If you want, you can redefine it now, or you can leave it and then mark your 1 minute zone, right? A big old wick there, crushing it. And mark your 1 minute zone. Now, not only are you working with all the zones, you know your first alarm is obviously set at the below the price, right below the decisional zone. So now you know, okay, because you want to be watching when it's bouncing around in here because you want to see it come up into your, and now you're looking, you know, it tagged it. You wait until it tags, you wait till it tags your entry. You don't get in. I mean, it's up to you, but you don't get in when prices coming up in here like this, right? As soon as you hit it, you don't get in as soon as you hit it because now your stop loss, you get in there, is this big, right? You don't want that. You want price to come up in here and tag your zone because now you got an entry signal. Now you're getting in right here, and now your trade is going to triple in size, you know, just because you've mastered getting into the trade. All right, once again, we're back in here. We know that this is an extreme zone on the 1 minute. And then we have, I don't even want to mark these because prices are already pushing through them. I am going to mark that there is a potential SMT here, or potential trap. This could be a SMT potential where price is going to hit it and reject down, or a potential decisional supply like that. So we're just kind of waiting. Personally, I don't know if I'll take this trade until it comes up here into this zone here. The decisional here up closer to our extreme supply zone. This is more of a question mark to me, just to let me know, like, just be cautious. So I'm going to mark it as a weak zone, just so I'm cautious and aware. Okay, there's a little bit of confusion here. We got to wait and see what happens. SMTs can get made off of this zone, or we want to see a huge rejection, confirming what it's going to do, and then our entry signal, and then the rejection and the retest. You know, we want to wait for added confluences if this weak zone is going to take a trade. So now, zoom back out again. What do we have? We have every structure broken out. We have every time frame broken down. And once again, we don't have it broken down all the way up here because we're not focused on all this up here yet. We are focused on this bottom, this little chunk of the trade. This is how small we are. We're focused on this little bit, not this whole bit, this little bit. And then if price breaks this little bit, then we open up the little bit into a medium bit and then the big bit. You know what I mean? As soon as it breaks here, okay, our next target's here. What is we got to break this down. Okay, that breaks, then we jump into this. We our high and our low. Now this is our external high and low. We know that there is structure and liquidity in this. Then we just jump to this realm and then we jump to this one. Now we know, okay, let's be careful. We are right next to our extreme on the 4 hour where price will flip and head to in a different direction. So that's why we start from the big, find everything, bring it down to the low, and target everything like that. Okay. And then Euro USD, last one of the night. Let's clean the charts and break it down from the top. Okay. Let's see here. Okay. Right now I'm marking just zones or areas where price has rejected a few times. And now I'm going to jump in here. We're going to mark our, once again, our external high, external highs, our external lows, external low. Okay. We have our internal structure. Oop, that's the wrong button. We have our internal structure here, internal high, and our internal low, like this. Boom. Okay. Now, if you want, like I said, you can mark it with your dots and then get rid of your lines. If you don't want to do that, leave the lines up and then start practicing with the dots as well. Put the dots and then put the lines. Start out with just the lines and then start adding the dots and the lines. So then you can know, okay, the dot means this, dot means this, dot means this, dot means this, right? And then eventually you can delete the lines and now you know that your dots mean this. So that's what I would suggest doing in the beginning, marking everything, understanding, okay, I know what's going on here. Blue dot means internal high, internal low, or internal structure, right? Brown, orange or red dots mean bearish structure. Price is bearish. Green dots mean bullish pressure, right? Okay. So now we got obviously our extreme. We're not going to mark it down here because it's at the bottom, but we're going to mark this internal structure here. Why are we marking the whole thing as a extreme or not extreme decisional supply? Well, because we do have imbalance. We have imbalance all the way down here like this, but the supply, the eternal low stops here. So if price is going to have the rejection, I think it's going to grab this liquidity from experience. It grabs this imbalanced liquidity, right? Like that. And it's actually going to tag in deeper into the decisional, or at least into the decisional, because it's an internal low. And it's because it's the decisional supply and there's liquidity in here. So that's why I don't mark the imbalance on this one. You totally could and run it big like this. But I think this is just fine how I'm marking it like this. So again, internal low is right there. We are no blue dots, internal structure. And then we do have a weak zone in here at all, because if price breaks this, we're just going to look for price to come all the way back up into our extremes, which would be here. Once again, we would fine tune it on the lower time frames as well. So we do have that marked. Go down to the 1 minute or 1 hour here. Once again, we can fine tune it to, but there looks fairly good. And then actually, I do like this full thing like that. I'm gonna keep it. And then I'm gonna keep that as well. So once again, we have our internal structure like that. Extreme high, external low on the 1 hour. this could be a decisional area. This. I'm actually going to, yeah. Okay, go to the 15-minute. Once again, we can fine tune this. Okay, we know that structure is here all the way left. That's why this is marked here. And we know that structure all the way left is here as well. So these could be sell targets or strong rejection points. So if we see the sell on this one, we want to see price come up here, grab the liquidity, do our entry signal, and then retest this zone here, and then take the sell. So then we would be looking for a position like this to the top of that to target our 1 to 3 to the next structure low. Because we know that liquidity is attracted to that. And I'm just seeing this on the 15 minutes. Once again, we jump down to the 1 minute, and then we find our extreme zones and look for our targets, like the same as we did on the rest. Let's see. See, all this has been mitigated. All we know is that we have a target. We have a little bit. Let's go to our 3 minute. Can we see those? Okay, so what I just did here is you see on this huge downward slope, you see these doji candles like this, like this, and like this. So what I do is I go to the 3 minute and I'm seeing is, can you see those 3 minute, those 1 minute doji candles to see if they're structure or anything important? And as you can see here, they're not. You can't see them on the 3 minutes. You can only see them on the 1 minute. So they become pretty useless and worthless to me. So I'm not super worried about them. So I'm not going to mark those zones. I'm going to look at our 1 minute extreme. Okay. We know that this is kind of an ugly zone because of the fact that it blows through. It's been mitigated and target's not good. So I'm looking at this candle here that has not been as an extreme supply zone like this. And now we have our target for the night into London session. We have, if the buys are going to come in, we have liquidity swept down here. We are, looks like on the 1 minute, we are bullish. There has been an inducement here, BOS here, inducement here, BOS there, and price is now pushing and continuating. So we'll see if we have the push up into our extreme here by the time London comes. And I don't think we will have it during London. We might have it during New York tomorrow. So yeah, that's kind of what I see for tonight. If you like these videos, let me know. Just kind of everything I do broken down step by step. It's very easy. It's like I said, it's the same stuff over and over and over again. And if you want to watch this video on repeat to kind of get the steps back to back, that's good. Otherwise, I do have a book that I just wrote. It is free to all my students. So if you become a student, you get the book for free. Otherwise, you can click the link in the bio and get the book. It's called The Blueprint. You don't have to. It's just going to help you step by step so you can physically read it instead of having to watch a video on repeat on all the time. If you can physically read it, you can have the page in front of you and read it. So what is the exact same thing I just went over, just step by step, just on paper instead of on video. All right, guys, I will see you during London. Thanks for watching and take care. Peace, team. I will see you in the next one. Thanks.